I am Cherie Leede. I'm the CEO of Gold Bull Resources, a company that I co-founded with Craig Parry back in 2020. And Gold Bull Resources is a gold-focused exploration and development company in Nevada.
Cherie, nice introduction. Good to meet you. Now, the theme of this interview is you're the contrarian investor, looking at how we're dealing with the markets where we are. Now, I see from Gold Bull Resources that you've actually, in a way, you've already rolled with the markets, you've already adapted. Could you just tell the viewers what I mean by that, in terms of going from the big picture exploration to the scoping study on the project?
Sure. We've had to be agile along with market conditions in the gold exploration sector this year. We started off with acquiring the Sandman project in December 2020. We paid $4 million for the asset from Newmont. It had 290,000 ounces of gold at the time. Since that time, over the last 18 months, we've done quite a lot of drilling, about 10,000 meters of drilling, and we've increased the resource to the current resource just shy of 500,000 ounces. And we were on a mission to get over 1 million ounces via exploration. So essentially, the more we drill, the more we spend, the more ounces we're adding. However, we noticed in this year's drill program, mid-2022, that our positive news results and our positive gold intersections weren't having a positive impact on our market cap. In fact, the more we drilled, the more we announced, the lower our share price went, despite the good news. So, as a board, we had the decision: do we keep spending a couple of $1 million more on these drill holes, which are adding ounces, but really the market does not care? In fact, it was catalyst to sell, or do we look at plan B, which is, well, we already have 500,000 ounces with a high degree of confidence, and is there a way that we can add value to our shareholders via looking at the economics of extracting that? So I guess we've definitely changed because of the market. Rather than continue to drill and continue to grow our ounces, we've had a look at the PEA scoping study that we just announced.
So that scoping study came out. You've wrapped some economics around it. Before I get into the next round of questions, can you just provide a snapshot of what the headlines were from that scoping study, please?
Absolutely. So we have 500,000 ounces of gold. The scoping study only looked at half of that. So the scoping study only looked at 250,000 ounces of the gold, and we chose to only look at the gold above the water table, and that's because that's a lot quicker and easier to permit in any country, especially in the USA. When you start looking at extracting ounces below the water table, no big deal, but just requires additional surveys, baseline work, and that adds over a year of time. So for the sake of getting this thing into production as soon as possible, we looked at only half our resource, and we looked at a 35,000 ounce per annum operation. And the numbers came out to be amazing IRR of 99%, NPV of $77 million. I think currently our market cap is about 6 million Canadian. So that's half our resource is a 77 US NPV. The deposits, we have 4 small deposits at Sandman that account for our 500,000 ounces. They're literally sticking out of the ground. So we've got very low strip ratio of 1.6 to 1, average gold grade of 0.74 grams a ton, and all oxidized. So this stuff just really leaches out of the rock very easily. And importantly, in this market, a relatively low capital requirement of about $28 million, again, US, and an all-in sustaining cost of $11.73. So the numbers look good. It looks like it's got the potential to be a small-scale cash cow. And for us, the goal has never been 35,000 ounces per annum either. However, there's just so many companies that have really made their start on similar size startup operations. So, we're looking at the B2s and the Equinoxes and so forth, and saying, well, and they're currently $1 billion company, and they started with a 30 to 40,000 ounce per annum operation. So why don't we follow that same model?
And it's a heap leach operation is about the simplest thing you can do, especially if you've got oxide material, almost free dig, probably rip and dig. I just cast my mind back to Clough Gold. You probably don't know, it's a British company that had an oxide operation. It started in 1997, I think, in Ghana. And they built that thing for 2 bob and a pickled onion. I mean, it was basically a dozer and some ponds and a heap leach circuit. And they were pouring gold out of it. And it's not just Clough Gold that's done it. There are plenty of companies in Mexico that, on the in the Sonora district, and they're mining kind of 0.5 gram material, and they just get into production quickly. You build up the cash flow.
Yeah, and the same thing, Nevadans are king of heap leach. They've been doing this for more than 50 years and doing it really well. And just about every operation that I know that gets into production, and anything under 100,000 ounces ends up getting taken out. I mean, even the majors, did the merger to form Nevada Gold Mines. This is highly profitable. It's super simple technology. It's not rocket science. It's more like a quarry operation. And right now, I know Marigold is mining 0.3 grams a ton. So 0.7 grams plus is actually considered like high grade when you look at Nevada and heap leach with such low strip ratio. And the people that were involved with our PEA, they've built mines in Nevada before. They've done this before. All of our consultants, this is not their first rodeo. So I think we're in really, really good hands. We've got a great local team. And another one of the benefits of having a project located near Winnemucca is that you're not importing the people. They already live in the mining hub of Winnemucca. Thanks to Nevada Gold Mines, there's already thousands of skilled people in that district. And now we've got another half a dozen companies that are developing mines and calling Nevada home. So the skill set's already here.
And what about the confidence in, it's a scoping study level economic wraparound that you've done. What about the confidence in the resource, grade continuity, metallurgical heterogeneity, metallurgical test work, handling of the material, I don't know, clays, how much work have you done and how much work are you going to need to do to take it to the next stage?
Sure. So the resource, I'd say we've got an extremely high level of confidence because courtesy of Newmont, again, we inherited about $30 million worth of data on this asset. So Newmont predominantly drilled wide diameter PQ core, and we've still got all that core. We inherited all that core for the project. So we've predominantly been doing RC drilling, infill drilling for our exploration holes, but the resource is based on over 1,000 drill holes, which is quite extraordinary for only 500,000 ounces. So resource-wise, we're super confident. If anything, I'd say there's upside because there's some high-grade shoots that haven't been included in the resource because there's only one hit of super high-grade gold material. So I'd say the resource is somewhat could only get better, and confidence is there.
Hang on, and are you comfortable with the orientation of the drilling that was done? Are you confident with the geological model that Newmont had? It's mostly orthogonal to mineralization. Did they get the geology and you haven't had to reinterpret it?
No, they did a good job. So we're very happy with the data that we've inherited from Newmont. It's basically fit for purpose. And where we had some question marks, we've whacked some holes ourselves. There was some question marks over oxidization, things like that. So we've answered those questions in the drilling that we've already done, especially when you're talking about mining of the oxide. We're talking about everything's in the top 100 meters. So we've got an amazing amount of data in the top 100 meters. In fact, below the 100 meters is where there's a lack of data, and that's where the exploration potential lies.
And from what I can understand, what I've seen is that you're taking it down to the existing water table.
Yes, correct.
Is that the existing? Does that existing water table correlate with the transition zone, or is there a historic kind of oxide potential that kind of goes deeper than the current water table?
Yeah, the existing water table isn't the marker of oxidization. So, for example, our resources to the North Hill and Silica Ridge, they're essentially entirely oxidized. At Silica Ridge, we start to get to a sulfide. So at North Hill, we've got a few hundred meters of oxide, and we're still in oxide. But then you go to our southern resources of Abel Knoll and Southeast Pediment, and there you get a transition zone closer to about 100 meters. So that's a 100 meters difference within two of our resource areas with respect to oxidization. But for above the current water table, everything's essentially oxidized, so we don't have to worry about getting into any transition.
So everything in your mine plan in the scoping study is well oxidized. What about handling characteristics from in your 4 pits? Have you got some which have got more clays, which are not going to percolate so well on the what are the leach characteristics on the pad? The permeability, sure. The kinetics.
So we actually, it's not a clay rich deposit. It's adularia rich. So if anything, we've got the hardness to deal with versus the clays at this project. It's essentially adularia flooding over the entire province. And that's probably a positive, I'd say, with respect to recovery. Again, all four deposits handle slightly different. And we've actually decided to use a conservative presumed recovery of 70% in our preliminary economic assessment. However, our actual results from bottom roll test work indicate about an 85 to 90% recovery. And we've gone conservative because that's an area that we would like to do a bit more work on. There hasn't been enough metallurgical test work done for us to call this a feasibility study. So in the next 12 months, I would like to see some more holes go in there to answer some of those metallurgical questions. And it's essentially to give us more confidence to say, well, our recovery is actually 80% or 85% or whatever that number is. But based on the preliminary work, it's certainly looking over 80, but it's just not enough work for us to be confident that's indicative and representative of the entire deposit.
And presumably Newmont didn't go down that metallurgical test work because they were looking for the big multi-million ounce deposit, and so why would they
surprisingly did a bit of met work because they had an earn-in joint venture with Frontier, so they actually were trying to spend money on the project. And we still have a massive test pit, a hole in the ground at Southeast Pediment, where they sent bulk samples, they truckloads of the stuff to Twin Creeks. So we actually have real life bulk sample metallurgical work for Southeast Pediment. And they also did some test work for North Hill and Silica Ridge, but Able Knoll was the deposit of ours that we were lacking met work, and we've already done some bottle roll test work that had extraordinary recoveries this year actually. So all the met work's looking super positive, but it's just not feasibility level met work. So I can't tell you that this is feasibility study. This is a scoping study, so we have to do a bit more work with respect to met before we start digging this out of the ground.
And I don't want to put cart in front of horses or anything. I don't want to jump a gun, but if you do get a better recovery, I mean, that obviously has a kind of significant impact on the economics.
Oh, absolutely, because we've used the conservative 70%. But we also, in a scoping study, you don't want to come out with your best numbers first. There'll be a PFS or a FS before production. So we also wanted to be somewhat conservative in these assumptions and also see what the reality is after the additional metallurgical work. So hopefully there's a bit of upside to come out of these numbers.
And just going on the Adularia being a kind of a hard, almost kind of a hardness thing, does that mean you're conventional drill and blast in this operation? It's not a free dig.
Everything's stock standard conventional. Yeah, conventional blast.
Okay, good. So what are the next steps in terms of advancing that oxide above the water table resource? What are your timelines and your commitments? What are the major milestones you need before you can get to the PFS stage?
So we've decided to, I guess, essentially commence the long lead items for production, and in parallel be working on some of the FS components. So there's certain monitoring surveys that just take time. So, for example, in the US, you have to do 4 quarters of water monitoring. Regardless of whether we're staying above the water table, we need to prove the negative. That needs to start essentially before you can submit your mining permit. So just knowing we're looking like we're going that direction, we're going to start that in Q1 next year. So then we can say we've ticked that box and that the clock starts ticking with respect to our permits now. And in parallel, we're doing the additional work that was identified in our scoping study as the next step for a PFS or FS, including some of those wide diameter holes for our metallurgy. These are quite low cost aspects because, again, we're only talking about the upper portion. So when we're talking about drilling holes for met, we're talking about drilling down to a max of about 80 meters. So it's all pretty cheap to work out these characteristics, just given that we're talking about a deposit that's outcropping. So we're starting to essentially create a list. We're having those discussions with the miners and the metallurgists. What do we need? What's missing? What are the critical aspects that we've got to get right to ensure this gets off the ground and is a success? So the long lead permits are number one.
Do you have to drill more fresh material for fresh holes for metallurgical test work? Can't you use the existing PQ?
We're actually looking at that right now to see whether we've got enough. Some of the Newmont holes sent all of their PQ in the mineralized section to the lab, so they'd send some to, half to the assay and half for met work. So we're going through the core at the moment to see if there is enough or whether we will have to put a few holes in. My gut feel is that we will have to do a couple of holes. I don't think it's going to be many, but there'll be some geotechnical question marks that I'd like to know. What is the angle of our pit wall? Is it 60 degrees? Is it 80 degrees? And I think we'll need a couple of diamond holes to really ascertain those things before production anyway. So we could probably do 2-for-1 holes where we're getting metallurgical information and geotech information. And
you're pretty much looking at a 7 or 8 year mine life, is that right?
Yeah, the current mine life is around 6 years. And then the theory is that during those 6 years, we'll be permitting via the more comprehensive permit and monitoring surveys that go beneath the water table. So then that essentially doubles just from the known resource. And in parallel, one of the reasons why we're trying to get cash flow is to continue to explore and add ounces. So most of these resources remain open. So although it's 5 to 6 years on paper now, we've got another 5 to 6 years sitting under this already that we're doing in stage 2. And then beyond that, there'd be the exploration in parallel. So, we're starting off as 5 to 6 years, but the intent is that this is certainly, going to go beyond a decade.
Because if you take a really short-term approach, you can, even if you've got a kind of a 6 year mine life, you can really steepen up those pit walls. But if you're looking for a slightly more stable long-term environment, you'll want to take a more conservative approach to those pit walls.
Yes, and currently we've used that conservative approach because we're quite confident there's more ounces to be found at Sandman. But we're seeing right now, it's so sad that you can acquire and buy ounces cheaper than you can drill them out. And that's just a reflection of the depressed exploration gold sector right now. That won't always be the case, but right now, why would we spend $5 million adding more ounces via exploration when I could buy a neighbor for $5 million dollars type thing? And that's the sad reality of where we're at. So that's why we're trying to be a little different. We're very fortunate that we have an opportunity to actually progress a project that I firmly believe will be a mine one day. So not every company sitting on a project like Sandman that is located in such a mining friendly jurisdiction, and it's pretty low risk when I look at a startup operation in terms of the technical aspects. The Sandman comes down to the gold price. And what's your view on the gold price will depend on whether you think Sandman is going to become a little cash cow. And 35,000 ounces per annum is not Gold Bull's end game, but we think it could really differentiate us and set us apart from the rest by being a cash flow producer.
But the market historically doesn't really care about small producers. It's more of a kind of a corporate thing.
Yes and no. So the market hasn't rewarded our PEA. And that said, we're getting people knocking on our door, gold producers and mid-tiers, looking at our project now. And the other small scale producers that have got up and running in Nevada have been taken out. So this year we had Calibre take out Fiore, and they're probably thinking that was a wise move after last week's drama in Nicaragua, and now they've got a decent asset in Nevada. So I think becoming a producer does differentiate you, and there's not a lot left in Nevada that have not been taken out. So I do think it sets you apart, probably more corporately versus share price wise.
Yeah, it's funny, isn't it? I think the market hates you when you're trying to build a mine, but when you've done it, you're rewarded.
Yeah, exactly. Yeah. So and that hates you, but to be honest, I was in Vancouver last week and just canvassing the capital markets, and I don't think there is money there to raise money on early stage exploration right now, but I do think there is money to raise development capital. And essentially when investors see that this is going to be the last raise before you're a cash producer, or the second last raise, and that there's light at the end of the tunnel. Whereas right now, if you're a hand-to-mouth explorer, you go in the market and there's no income coming back anytime soon, and it's just continually going back to the market. So I think just given the state of the market and the fact that we don't know when gold is going to rally, I think most people in this sector are gold bulls like I am, but I don't know if gold's going to be 2023 or 24 or 25. And then this essentially lets us control our own destiny. And we're not always going back to the market and diluting our shareholders, of which I'm a shareholder, Craig's a shareholder, our directors are shareholders. We all put our money where our mouth is, and we all invest on the same terms as our investors. So we don't want to be continually diluted when we've got a really robust project with good economics.
And you came to market quite recently, didn't you? You're a relatively new company. When did you list?
So we actually took over a shell called QX Metals, which had some assets in Bulgaria and Romania that weren't going anywhere due to permitting reasons. And we took over that in mid to late 2020, and we acquired the Sandman project in December of 2020. So we've only been around 18 months.
Right. You've got some. Where are your major backers? Your kind of you've got a big family office behind you, haven't you?
Yes, the Flannery family office are our largest shareholder. They're based out of Sydney, Australian mining astute investors. And our next couple of large shareholders are also Aussie money. So a lot of Aussie and Canadian investors in the space, trying to work on the American book and retail at the moment. But I'd say the top 20 are probably over 50% Aussie, and the rest Canadian and American. A few Germans in there as well.
And if it's a mining family office, if it's mining money behind it, then presumably they're quite comfortable about the development kind of strategy that you've developed in the last 12 months. Yeah,
it's probably been in the last 3 to 6 months, to be honest. But the major shareholders are definitely on board with the strategy, and most of them have indicated that they would be there to contribute, for that strategy. And in addition to having really supportive major shareholders, there's also debt on offer at very low interest rate terms to numerous projects. Obviously at PFS or FS rather than scoping study. So we've got some work to do, and we're cognizant of what that work is. So we're getting on with it immediately to progress to the next step. And with my half a geological brain that remains, Adularia flooding. That's not that common, is it? What kind of event are you talking about that kind of brings that much Adularia into a system? Yeah, it's quite a unique phenomenon. I haven't seen a lot of projects like it myself, and we've had some geologists that are brighter than I am to the project, including John Wood, who discovered the Sleeper deposit, and also Simon Meldrum, who I consider a bit of an epithermal expert. And both chaps independently have essentially vouched that the exploration potential of this region is quite immense, because they see it almost as we've got 500,000 ounces out of our 4 deposits, and then we've got another couple of known circa 50 to 100,000 ounce deposits in the region, and it's almost like 1 million ounces of known anomalism, at the surface. So they're most interested in looking for the feeder and the source of what our current resources are, rather than focusing on the current resources, which almost you get biased because that's where the gold is, so you go there. They think to take a step back and look at this. We've got an immense land holding that's fully permitted under a plan of operation, so they're fully supportive of additional exploration strategies, and they both have a slightly different approach. So John is of the Sleeper model, which was a 3 million ounce high grade deposit located. It's only about 30 kilometres north of Sandman, same rock, same system actually. And on a structure. He thinks exactly along structure. So John thinks we should be looking for feeder structures, and he believes that they're probably going to occur on the contact of 2 geological rock types just below where our current deposits are. And although there's been thousands of drill holes at Sandman, there's been hardly any less than 200 metres. So John is basically of the firm belief that we need to be drilling on this. Essentially, the gold comes up the structures, and then John believes the first place it congregates is the pressure release zone, which is going to be the difference of 2 rock types. And that hasn't been a model that's been adequately explored previously. They were very stratigraphic focus and just looking at particular zones in the horizon. So there's immense upside from that perspective. And then Simon is more basic analysis. Again, structure, they've got structure in common. And essentially he's recommended we do things like gravity and seismic and deep holes, again, targeting multi-million ounce deposits, because both these chaps are looking for 5 million ounce deposits wearing their Newcrest or their Newmont advisory hats, not really with their gold bull hats. So we're really excited to if we're in a position to generate cash, we'd have the ability to drill 500 meter holes and really test these 5 million ounce targets that we already have on the project. That's a nice conversation to have in a different environment, when gold price is different, when there's capital available, when exploration is back on the cards. Yeah, exactly. It's not for now. And so we've listened again, we've been agile. And as you said, you started off our conversation, we've had to change our tact and our objective with the market sentiment. And that's essentially the reason why we're now looking at a small scale startup instead of continually drilling these higher risk, higher reward style exploration holes. So what does the retail investor need to look out for in your announcements and your progress over the next 6 months? What are you aiming to present to the market to say these are kind of
trigger points or milestones that you're glad that you've reached that may cause be a catalyst for share price movement?
Well, I thought the PEA would be a big one, and we haven't seen that translate. So it's just doing these interviews to really get out the message. I'm doing a roadshow for the next couple of weeks to essentially let people know, we've got this US $77 million NPV on a pretty easy project that's looking at half our ounces at the moment. We've got a market cap of 6 million Canadian. So there's a big disconnect, and there's a massive buying opportunity, in my opinion, with respect to where we are currently. Just getting the story out there. A lot of people still haven't heard about Gold Bull Resources because we were born during COVID. So there wasn't the usual marketing and getting out on the street. There's been a lot of Zoom things like this and not enough pounding the pavement. So First step is get the PEA news out, get that in front of the retail investors, and essentially let them know why we've changed tax. It's not because we don't think there's 1 million ounces at Sandman. It's because there's a lot more money for development capital right now than there is for exploration capital, and essentially get that story out there to see if that proves a re-rate or see if it's falling on deaf ears. If it's falling on deaf ears, we're still going to progress on a shoestring. We've already have enough funding in the bank. We're not come raise, and we're going to progress these long lead items. So you can expect updates on these long lead items. We've commenced water monitoring. We've commenced metallurgical drilling. We've hit this, and this is what our recoveries are looking like. So next year is going to be essentially progressing Sandman this direction, and hopefully a little M&A activity would be nice. I'm also spending a lot of time on fielding inquiries, site visit and CA requests, and this is pretty much on the back of our PEA numbers. So again, although retail hasn't really got it, there's other companies that are certainly looking at Sandman as just, well, we didn't realise that this project looks so good.
Good. Well, good luck with that all of that, and good luck on the marketing travel over the next few weeks. And I look forward to following up and seeing how the news progresses during the course of next year. I mean, for me, the metallurgical test work, if you can get that number from 70% up to the mid to high 80s, that'll be that's a major step change in the valuation of the project.
Absolutely. Thank you for your time, Ellen.